All right, welcome to Falcon Forward. My name's Peter. I'm with our president, Mike Tanghe, today. I'm actually recording from the Chubb headquarters here in Southern California. I'm in their quiet room, not being very quiet, but there is a phone next to me, so maybe that gives me some sense of relief. So, training here with Devin and Maceo. Mike, I'm just thankful that we were able to kind of keep our regularly scheduled programming together. But how's your week going?
Yeah, my week's going fantastic. Thank you. Good meetings, good stuff. Just finishing up the end of the month. May 1 is a busier month, so just trying to make sure everything is done as it should. So all good on my
Yeah,
end.
fantastic. Well, so we were talking a bit during the pregame about what we want to talk about today, and you had put together a deep dive on how a successful family should set up their personal insurance. So, as I'm sitting here already inundated with Chubb's meticulously designed course trading here on all kinds of coverages, we're going to switch gears here and talk about personal lines. So, excited to hear what you put together and how this should be done.
Awesome. Yeah. So if you have stuff, if you've built up assets, if you're in the process of building up assets, a lot of what people think about insurance, and this is specifically related to your personal liabilities. So things like your home insurance, your auto insurance, your umbrella insurance. A lot of what people have been told over the years just is not right. And what you're telling someone who fits in this category is going to be much different than what someone who doesn't have any assets. Think the 22-year-old who just got their first job and is, scraping to get things together, or a family that, unfortunately doesn't have a lot of stuff to protect. How they're going to approach insurance is going to be much different than how that family that we're talking with should approach it. And unfortunately, a lot of insurance companies, like if you think of like the companies like the State Farms of the world, it's one size fits all. So their policy that they sell to someone who has $100,000 house can be the same exact policy for someone who's got a 10 or 15 or $20 million house. So with that in mind, there's a lot of things you can do, a lot of levers that you can turn to make sure that you have the right insurance in place. So we're going to run through those, Peter.
Okay, sounds good. As I'm sitting here and we're talking about commercial policies, I started thinking personal lines. And because we're talking about claims today and how claims are handled. And I've heard over and over again from clients, and this is more, I think maybe it's the marketing team from Pure and Cincinnati and all that kind of compiling this, but they always seem to take care of their clients. And I think the reason is it's built for purpose, right? Like it's fit for that type of person that's using it. And I know other companies take care of clients as well. But anyways, I'm excited to kind of find out maybe about the claims process after we walk through some of this too, like why that matters. I think is really important as well.
Yeah, perfect. And some of the things that we'll talk about here do relate to claims.
Perfect. Okay.
So if you take out your typical home insurance policy, what things do you want to make sure you have in your policy? So the first off is you want to make sure you have the highest deductible possible. And this really is where your agent requires, because for some people that may be 10,000, for some people that may be 100,000. Uh, but what's important to note is most of the high net worth carriers, so think Chubb, think Pure, think Cincinnati, think AIG, they'll waive your deductible if your loss is over 50K. So, and what are they trying to do with that? They're trying to encourage you to self-insure little claims and then save your insurance for the big claims, which is absolutely something that we recommend for people. With that in mind, you want to look at, okay, how much does my insurance cost? And then where is the sweet spot? Is it, 5K if it's a kind of a smaller home? More likely than not, 10K would be the most common deductible you see our clients have. But certainly we have clients that have 25K or 50K or even 100K deductibles, depending on the cost of insuring the home and then the size of the home will all play into that matrix. But you for sure want to set that deductible as high as possible. Lots of times we'll see people with like $1,000 deductibles on their, these expensive homes, and it just makes
Yeah.
no sense at all.
Okay.
Second thing you want to do is a lot of people have friends that are contractors. Just reach out to one of them and say, hey, you've been in my house. What do you think roughly the cost per square foot to rebuild my house is? It'll take a good contractor all of 30 seconds to give you that number. You multiply that times the square footage of your home, and then you'll know, okay, is my insurance adequate to replace my home if I have had to do that? Unfortunately, like when you see these big events go through, think wildfires, tornadoes, it's the wrong time to find out that you don't have enough insurance when you start getting bids on those homes to replace it. So it's something you can easily do. It's a 30-second conversation with a friend, and you want to make sure that you have that adequate value on it. A lot of people now too, common to build like a cabana or an AD or just a separate garage or a pool house or something along those lines. A lot of times people don't pay attention to that value. It's typically a percentage of the home itself, of your main home. But you want to make sure that that is an adequate amount to replace other detached structures you have on your property. If you've done any remodels, and we just saw this recently when we sent out a newsletter about have you done solar updates to your home? But any updates to your home, just let your agent know. And again, that could be something like solar. It could be adding a pool, a cabana, ADU. You want to make sure that those are listed on your policy. So again, if you have to make a claim, they're going to be adequately covered.
Hmm.
You should also let your agent know if there's been any updates to your home. So the most common ones would be like replacing your roof. That can actually get you a better credit on your policy. So let your agent know about those updates. Same thing if you update your electrical, your plumbing. If you've added a generator to your house, let your agent know those things as well. And then also ask about discounts that are available. So we see like water shutoff valves are becoming more and more common, something that monitors effectively their leak detection programs. If you have one of those, make sure your insurance company knows that. Same thing with like central alarm systems. And then cameras don't always necessarily give a discount, but they're great because if someone is saying something, especially if you have like a pool or it's just a great way to, video is worth more than just someone that he said, she said type situation. If your property's held in a trust, super common for a lot of our customers, make sure the trust is listed on the policy. Very important to do. If you pay off your loan, a lot of our clients are doing that as well. I let the insurance company know so that, again, if you have an insurance company or a mortgage company is listed on the policy, guess who the check gets made out to? And if you're no longer working with that mortgage, if you paid it off, then let the insurance company know so you can avoid, and not that it's going to hold up or negate a claim, but it's just going to add a bit of hassle that you don't want to necessarily have to deal with. And then the biggest thing that we have is, and this is really changing people's mindset on it, is insurance is not for little losses. So if you have really anything less than $15,000, let's say you have a little minor water leak or something like that, or just some sort of small damage to your home, even if it's below or if it's above your deductible, let's say you had that $10,000 deductible and you have a $20,000 loss, don't turn that claim in. Save your insurance for that catastrophic type event. Because the problem is someone says, well, I've never filed a claim, so I'm going to file this one for $20K and get my 10K or 15K payout from the insurance company after that. We don't know what the future is going to hold. And if you've made that small claim, what you for sure want to make sure it doesn't happen is you have two claims in a 3-year period. And again, who knows what the next 36 months will hold after you've made that small claim. But if you have a significant claim that you would use insurance for, now all of a sudden that person has two claims on their record, and they're much more likely to get canceled by their carrier versus if that in the same scenario, if that person would have self-insured that first claim, now they would only have the one claim on their record going forward. So those are my home insurance tips, Peter. Any questions or feedback on any of those?
Yeah, so we've talked about, trust being a big one and obviously, that kind of comes through, but like when it comes to like rental properties, right? So if you have a rental property, like it's because it's not uncommon to have maybe have one or two homes for some of our clients, or even have, other properties that you're sharing. But how would we handle those? And I guess like second homes, like they might sit vacant for 6 months out of the year. Like how does that work?
Yeah. So one of the suggestions we'd have is for rental properties, if you can put them in the name of an LLC, then that's beneficial to do so. Most of our carriers will allow, like you mentioned, one or two rental properties. If you get anything, I think usually the cap is about 4 properties. So if you have more than 4 rental properties, and then carriers will say, you know what, we no longer want to put those on your umbrella policy, list those on your umbrella policy. So the biggest piece would be, can you title in an LLC? If you have a bank loan on it and you're the one on the bank, like if it's a bank loan in your own name, then it's trickier to get that in an LLC because you have to do things like a quick claim deed, and sometimes banks won't go along with that.
Sure.
But if you own the property outright or you have a commercial loan on it, then great to set it up in an LLC. And all that does is say, if something bad happens to me, let's say there's a fire and someone's injured or someone dies in that rental home and you get sued, If it's in an LLC, then that loss is contained to the LLC, so they can't come after personal assets in that situation. If it is in your name, then again, we want to make sure that the umbrella that you carry, and we'll talk a little bit more about umbrella and umbrella limits in a moment, that it's adequate for that exposure that you have, and it's scheduled on that umbrella policy.
All my other questions were umbrella related, so I guess let's dive into that.
Yeah. Well, first we're going to talk auto,
Okay.
because that's the way I wrote it down on my sheet here.
Perfect. We'll follow it. Yeah, that's fine.
Yep. So same thing that we talked about on the home related to high deductibles. You want to make sure that you have the highest possible deductibles for your comp and collision. So for most customers, it's a minimum of 1,000, depending on the type of cars they have and their other, youthful kids and stuff like that. They'd either have 2,500 or $5,000 in collision deductibles. And again, what you're telling the insurance company is, hey, if this car is totaled and it's an expensive car, yes, we'll want insurance to cover for it. If it's a fender bender type thing, I'm not going to use insurance for that. There's a caveat to that, though. So if a person calls me up and says, hey, just got an auto accident, I'm going to find out, were they at fault? And super common fender benders in parking lots. If they hit a parked car and no one was in the other car, and let's say it's $5,000 in damage to each vehicle, we're going to tell that client to pay that out of pocket. Don't go through insurance to fix their car, and don't go through insurance to fix the other car. Hopefully they left a note or, somehow got a hold of the other party. Same scenario, same accident, same type of damage. If there's another person in the car that they hit and they're at fault, then we're going to say, let's use insurance. And all we're doing there is protecting them. If this person in 2 years' time, right before the statute of limitations comes up, sends them a note and says, hey, remember when you hit me in the parking lot 2 years ago? My neck hurts and I've been unable to work during these last 2 years. And here's my big lawsuit against you. If that client paid that claim out of pocket and there's no paper trail, there's no records, there's no information at all on it, becomes a lot harder to defend than if we have a very good, clean accident report and shows that, there's no way that this was possible what this person's claiming. A lot easier to defend that particular claim. So small claim, no one else in the other car, don't go through insurance. Small claim, someone else is in the other car, then unfortunately you got to use insurance just to protect your future exposure if that pops back at you. But there's other things you can do on your car coverage to make sure that it's optimized for you. So if your car is worth less than $10,000, and especially if you have like youthful kids or you have tickets or those types of things, I would consider not carrying physical damage. So don't carry comp and collision on that car. If you think about it, it's a 10K max loss. You're going to have a deductible that would apply either $1,000 or $2,500. And if you're paying, let's say, upwards of $1,000 a year to insure, a max $9,000 loss, that's just not a good use of premium dollars there. So we'd recommend in those instances, you self-insure that car for physical damage, but of course you carry liability on any vehicle that you're using. If you do get a ticket, go to traffic school. Even if it's your only ticket that you've had, by going to traffic school, you can keep it off your record. And again, if this is your only ticket, it's not going to have a huge bearing on it, but who knows what those next 3 years are going to be. You don't want to have 2 tickets on your record. And if you didn't take care of the first one, then it's too late to do so. Ensure that discounts like your good student discount, good driver discount, that you're getting all those available discounts. Agreed value is a great coverage provision to have, especially if you have either a well-maintained car that may be worth more than like your typical Kelley Blue Book, or it's an expensive car. What all agreed value is setting the value of the loss beforehand, rather than haggling over something afterwards if it was on a actual cash value basis.
Yeah.
Make sure you have your policy allows for original equipment manufacturer or OEM parts. You don't want to, crash your Ferrari and have them say, well, just take it to, Joe's salvage yard for a refurbished part on that car.
Yeah.
Make sure you have worldwide liability coverage for rentals. If you are traveling overseas, then buy the physical damage coverage because it's likely your policy won't extend to any damage to that rental car vehicle. In the U.S., it's a little different. Most policies will cover that. And then this is something we commonly see with our business owners is making sure the name on the title of the car matches the name on the policy. So sometimes people will buy vehicles in their business name or in an LLC, and that's got to match the name on the policy. If not, if you just imagine a claim where your car's totaled, what happens when your car's totaled? The insurance company is going to get the car and get the title from you and attempt to salvage it. And I've read of claims where, you buy the car in your business name, you insure it on your personal policy, everyone can see you're insuring this car, this VIN number, so forth. But when the vehicle's totaled and you turn it in as a total loss to the insurance company along with the title, and it doesn't match, that insurers could deny that claim because they weren't insuring that entity. There's all the auto tips, questions and all on that one.
Yeah, I think I always think about like high-end cars, right? So like I'm a huge Porsche fan and like GT3s and stuff like that are 300, $400,000 cars. And
Yep.
while it's a distant dream of mine to maybe drive or even have one of those in my garage someday, uh, like what carriers are covering that kind of car? Because it's hard to find that car. It's, you spent, there's a lot of love and attention that gets put into the details and selecting out that car and then driving it and the memories and all that. So like what carriers are covering those cars, and are there any differences with how they do it compared to like Haggerty? You hear Haggerty is like kind of the car club enthusiast insurance company, but is that always the case, right? Like what makes them special, I guess, or what makes Pure different? I don't know.
Yeah, so great questions. And we actually had this come up with a client who bought said car that you're talking about. So it was a 2024 that they purchased the car. So 2-year-old car. They paid 300 grand for it. And when we got the policy back from the carrier, so we added it and so forth. The carrier had put an agreed value of 197,000 on it. So I don't know where the disconnect happened. But we went back to the carrier and said, hey, you got to fix this. But that could have been a massive, again, that's why that agreed value is a great provision, because it says, hey, this is what it would cost to replace this car. This is what you paid for it. This is what it's worth. And you're eliminating that haggling that can come afterwards if we didn't have that agreed value provision. So absolutely, companies like Pure, Chubb, Cincinnati, AIG would be considered, the top tiers for those types of vehicles. For ones that are, I would call more daily drivers, they're great. Haggerty works great for a car that doesn't get used very often. So think more of a classic car that maybe you drive a couple weekends a month or so forth. And they do the same things with agreed value. Haggerty, I should probably look into it and know. I know that, and actually I have Haggerty for myself, but it's designed for vehicles that aren't going to get driven on a regular basis.
Okay.
It would be how Haggerty would get used. So something like this Porsche that my client had, Chubb is the more appropriate insurance for that, just because it's part of it's a regular driven car by him.
Gotcha. Yeah, that makes sense. I mean, we like, I think my family's had a number of older cars throughout the years, and we did use them. But again, they were cars we drove, once a year, twice a year, very rarely, and just kind of more like to an event, away from an event kind of thing. So cool.
Yeah,
Good to know. Because yeah, if you have a Porsche, you should be driving it, and if you're not, call me and I'll come drive it for you.
exactly. Yeah, you got to put it through its paces. So,
Percent. Yeah.
yeah.
Cool. Excellent.
Yeah. So next up, we'd be talking about an umbrella policy. And what is an umbrella policy? It's just higher limits. All it is higher limits over your personal liability. So that's what's associated with your home. And there's some people get a little bit confused about this. So my personal liability, it comes on my homeowners or renters policy. That's where I buy that underlying coverage, but it extends to any of my activities. It's not limited to the home. So think about you're in a grocery store and you hit someone's back of their knee with your cart and they injure their knee. That's a personal liability claim on it. Your dog bites someone, you have a dinner party and some guest gets overserved and gets an axe on the way home and you get sued. All personal liability type claims. And your umbrella policy is going to go over that. And the reason they call it an umbrella is it goes over multiple policies. So it goes over your personal liability, also goes over your vehicle liability, your auto liability. That's the most common type of big claim would come from your auto liability. That's the biggest exposure. But certainly there are large claims that happen. I think like if you have a swimming pool on your property or something, and God forbid, someone's injured, he breaks their head in the pool type claim. We've seen those types of things, unfortunately. An umbrella policy will also go over toys. So watercraft, ATVs, snowmobiles, all those types of things. Important that they're scheduled on your umbrella. So let's talk umbrella. So now we know what it is. How much do you need for your umbrella? Everyone's going to be unique depending on, what their risk profile is. So are they a highly recognizable name that if something happens for them, they're going to have a big target on their back? Do they have a lot of exposure, meaning lots of homes, lots of toys, lots of boats, those types of things that are a little bit higher? Not to say that you're going to have more claims with them, but if you do have a claim, they're a bit bigger in the exposure. So what we tell people is you should match your net worth, or if you're a younger person building up your net worth with a high salary and high earning potential, match your net worth up to 10 million. So if you have a 5 million net worth, have a $5 million umbrella. If you maybe have a 2 million net worth, but you're on your way to 5 or 10, then match your net worth or future earnings up to 10 million. Once you hit the 10 million mark, then it doesn't make sense necessarily to go dollar for dollar. So we have formulas that you use. It's, roughly 15% of your net worth for the next 50 million. So if you think about someone who's got a $50 million net worth, we're probably saying they should have a $15 million umbrella. After 50 million in net worth, then maybe use 5% of that number to determine. So again, $100 million net worth should probably have a $20 million umbrella, but you can use that as a rough baseline on it. And again, go higher if you're in a higher profile, lots of toys, youthful drivers. Unfortunately, kids are big exposure for you. We mentioned rental properties before. If you have rental properties in your name, it's difficult to. But this is where it's kind of an interesting concept for people is if you think about your umbrella limit, that is what an insurance company could potentially pay on your behalf if you have either a settlement or a judgment against you on it. Okay, so follow me on that. What they're going to spend in defending you is, in theory, an unlimited number. There isn't a cap on that number. So if you have a $20 million umbrella, the insurance company could spend any amount, 20, 30, $40 million in defense costs for you, and it's not going to erode that limit of insurance that you have. So the mindset here is if you're in a bad situation, so you had a family member who caused a really bad accident, whether it's in a car or whether it's on, a boat or anything like that. What you don't want to have is too low an umbrella policy and have an insurance company be like, wow, this is a really messy claim. We're just going to kind of leave over that door right there. And you bought $1 million policy from us. Here's $1 million. We know it's not going to be enough, but that's all you bought from us. So here's your $1 million check for whatever the jury awards against you. And you're on the hook for everything else. Like that's a really, really, really bad situation for someone. Instead, what you want is, let's say you have a $15 million umbrella and the insurance company thinks, okay, this is bad. Like this is going to be $1 million or $2 million claim against us. We're going to hire our A-team defense and we're going to spend $2, $3, or $4 million in defending this claim to make sure that it doesn't go in front of a jury, or if it does go in front of a jury, that we're going to, again, spend more money than what we think we're going to pay out for the particular claim, because that insurance company is looking at it saying, we don't want this $2 million loss becoming a $15 million loss. And so high umbrella limits for yourself, now all of a sudden you're in lockstep with the mentality of the insurance company on it. And what you both are concerned about, we don't want this going in front of a jury, and we don't want to see this thing getting, highly inflated and hurting both of us in that scenario. So that's the reason for carrying that big umbrella. It's also the reason for making sure, if possible, your umbrella carrier matches your auto carrier and matches your home carrier. Because again, if you're in a situation, that's an auto claim, very common, and we'll have clients who'll be like, man, we want the Chubb umbrella, but their Chubb auto is just too expensive. And it could be, they are not the low cost carrier. So it's not inconceivable that you could go to a Progressive or someone like that and get a policy that's several $1,000s less expensive. That client's in a bad situation in the event of that catastrophic loss, which again, that's the whole reason why you're buying this insurance, is if you're the unlucky person whose number comes up and it's a really messy claim, you don't want to be that one who's like, the insurance company, and especially if you have two different carriers, they're not necessarily going to have their interest align or your interest align. Those are very, very bad scenarios, super uncommon. But we have had it happen though to our clients, and the difference in, again, either way, it's a terrible situation.
Yeah.
One of those situations isn't going to impact their net worth or their future lifestyle, and the other one, unfortunately, could. So,
Okay.
does that make sense?
Huh. Yeah, it's such a tough thing because, like, I mean, we all look at, like, I look at, our monthly family budget, right? And what we spend, and and it's something that we track very closely. And I guess my question, or the thing that I think about, because I really spend more time on the commercial side, and the personal side I still kind of treat it as like my personal insurance, right? And yes, Falcon West is my broker, so to speak, but like thinking through that, it's like, we spend time and money looking for good insurance to make sure it's covered. It's difficult sometimes to project like where I'm going, right? I'm in my mid 30s. I have two kids. I have a wife. We do a lot of driving, all that stuff. How do you walk a client through figuring all that out? Because, if I've been in insurance, so like I have a sense of how I would do it personally, but on a broader scale, when you're talking to someone in their 30s, they're not really wanting to think about the risk, let alone they don't really want to pay to protect against it, even though they feel like it's necessary. Like, I got a life insurance policy when my son was born, but that was the impetus for it was my son was born. And I'm like, well, hey, if something happens to me, like I want my wife to at least have a couple years of runway to like figure out, what to do next, right? Or figure out how to replace me, right? Is the idea. How do you walk somebody?
Irreplaceable.
Yeah, how do you?
Irreplaceable.
But how do you walk somebody through that? Like it's not it's a tough internal conversation, let alone getting it on the table. That's tough to do.
Yeah, no, it's when you mentioned commercial lines and hadn't really thought, it's the same conversation we have with someone who's a startup business versus something that's, a third generation business that's kicking off, massive dividends to the owners. Again, you have a very different view of insurance on what you're protecting. Um, and so what I love about that is every conversation's different, every client's different. And now that I've been doing this for a while, I've had clients for 25 years. And the conversations that I have with them now are very different than what we had 15, 20 years ago
Yeah.
when they were starting out on stuff. So again, every client's going to be a little bit different. To your point, though, when you're talking with someone with that future earning potential, it's really no different than a life insurance policy is like uninsured motorist coverage. So you can be the safest, most cautious person in the world. You can't control what someone else is going to do. And again, if you're in a situation where you got rear-ended by someone and you can't work, um, what's going to replace that? Normally, you would go to the other at-fault party's insurance, right? They caused this. They did this to you. Um, what if you go to them, though, and you find out that they are legal in the state, but have $30,000 worth of coverage on it? Not even enough to replace your car that they totaled.
Yeah.
Who's going to pay for your lifetime of care? Who's going to pay for that lost income that you have? So uninsured motorist coverage is the fit to that. And again, so all these conversations, I'm giving very high level, hey, these are things you should be looking for. But all this comes with a disclaimer of you need to have a conversation with whoever you're working with to make sure they understand your situation, what's important to you. And you could have two people with identical situations, and one has a much higher risk tolerance, and then other people can't sleep at night unless they know that things are protected.
Right.
So again, everything gets tailored to the client. These are all just suggestions of what you should be looking for. And very commonly, we'll have people that are in a situation where their policies don't match up with where they're at in life. And that's just because no one has ever chatted with them about it, or they haven't found the time to go through it
Yeah.
and do that.
I will tell you, like, I never had a conversation about uninsured motorist with my agent broker until I think 5 years ago when I started digging into this a lot more. And so I don't know. I think that conversation needs to be had at a broader level, but at the same time, the general market may not be thinking through that, or the agent might not have enough time to go through it. And I put that in quotes because I think it's our duty to be able to have time for that.
100%. Yep.
Where does the this might be maybe my last question, but a lot of the stuff that we're talking about here, LLCs, trusts, those are more on the legal term side of things, right? And we don't advise on, we're not attorneys, we don't advise on the legal structure, but I guess where does that line get drawn? I guess, or is it, how do we partner with, your family's attorney or something like that, where we can kind of help have that discussion? Because I know that, we look at trust documents, and that's just part of making sure that we have the right name insured and all that's correct. Like, but maybe talk a little bit more about that, because that's a huge piece of I think the strategy overall.
Yeah, and you're absolutely right. We would never give legal advice to someone. If someone comes to us and said, "Hey, I don't have a trust, or my rental property is in my own name," we'll make suggestions like, hey, these are the pros of setting things up, but you need to talk to your attorney to have these things set up properly. So yeah, you're 100% right in that we're not going to give legal advice on stuff, but at the same time, when someone does have something already set up, then it's incumbent on us to make sure that their policies are reflective of how they have things set up. Because again, it's very unique to that client, and just having something, if they've done all these advanced steps, but their insurance policy doesn't match that and just lists their own name or doesn't list the LLCs or the trusts, then that broker has done a disservice to them.
Yeah, and I would say too, people spend a lot of time asking for referrals, vetting who their family trust attorney is going to be or who their legal counsel is for their business. And insurance seems to be one of those things that, kind of grows with you and you kind of just slap buy this here. Okay, we need that now. And you kind of just build this sort of portfolio. Not many people are, I don't think, trying to go choose an insurance broker, right? So I think along the lines of that, it's managing your growth and then also the risk side of it's equally important. So something to think like, yeah, we all spend a lot of time choosing who we talk to, even our jobs, like, how many people have we talked to, when I was talking, looking for a place to call, home for the next 10, 15, 20 years, maybe even longer, hopefully, we talk with a lot of people, right? You want to make sure you're with the right people. And so anyways, to that end, I guess it's always good to choose your broker, and you have that option too, right? You can choose who you work with and choose who
Absolutely.
represents you to the carrier. So,
Yep.
all good things to kind of keep in mind.
Yep. All right. I got a few more to knock through here. Are we still doing good?
Okay, yeah, we're good. We're good. I'm enjoying this. I'm learning a
Awesome.
lot.
All right. So just continuing with your umbrella policy. So lots of times we'll see people have vacant land on it and they don't necessarily think to schedule that on an insurance policy because there isn't a house to insure on it. Well, what if someone, is slips and falls, injures themselves on the land, they're hunting, whatever on it. So make sure that your vacant land is scheduled on your policy and correctly titled if held in a entity name other than yourself. And then you mentioned like Hagerty earlier. So if you have other policies, so again, commonly we'll see prospects that will have policies with multiple companies. So whether that be collector car, rental properties, holding a property jointly with another family member, like a cabin or lake house or something like that. Having toys, watercraft, ATVs, snowmobiles, making sure that those policies are all listed on your umbrella policy. So a lot of times people think, hey, great, I have an umbrella. And then we'll get in and review policies and realize that, half their stuff isn't covered on the umbrella policy that they have on it. So, and then my last umbrella tip is don't buy an e-bike. Just don't do it. There's no upside to it at all. Don't let your kids on them. Don't let your kids anywhere near them.
There's so much legislation on that right now. Like Carlsbad banned them. I mean, like, what really is going on? Like, are we seeing? Is there any conversation about that, or is umbrellas are just like, no, like we're done. Like we don't want
Well,
to do
and
this.
that's the problem is umbrella carriers are doing the same, grappling with the city. And why are they doing it? They're not doing this because these things are really safe and nothing ever happens on them. It's because they're involved in way too many incidents of people getting injured, people hurting other property, just unsafe operation. And so, same reason why carriers are looking to ban them or why you should ban them in your own household. It's because they're not safe. And the the maturity level of young riders, their brains just aren't developed to the level of calculating risk. And, when you're on a little BMX bike or something that's arguably dangerous enough, but falling off your bike at 8 miles an hour is much different than falling off a bike at 40, 50 miles an hour
Oh,
on it. And it's just don't buy an e-bike. But a lot of carriers are
yeah.
struggling with, are they covering it? Are they going to cover it on the umbrella? Are they going to cover it on the uninsured motorists? And you should assume that it's not happening. And so stay away from e-bikes.
Okay, understood. No, I mean there's some kids in our street that have them, and my son is always begging, and I'm like, well, my initial draw away from them was I need you to burn more energy, not less. But when you're on a bicycle, but the risk side of it obviously is there too. So
Yep.
good to know. Good to know.
Yep. And then we just have some kind of general recommendations that we give to folks when we're meeting with them. So lots of times, scheduling jewelry, artwork, those types of things. If you're going to replace it, then schedule it. Absolutely. It sets the value, it removes the deductible, it broadens the causes of loss. But a lot of times people will have these massive schedules, and if they lose something on it, they're not going to replace it anyway. So, in my perspective, then is don't schedule it unless you actually need to replace it or want to replace it. If you do have a large schedule of individual items, put blanket coverage on there as well. And that just gives you this kind of buffer if you buy a piece and you forget to tell your agent, or just for some miscellaneous pieces. Moving on from scheduling items, super important to schedule all the people in your house. So a lot of times we'll see kids like go away to college and the parents will say, finally, I can remove them from my auto policy. Um, but if that kid isn't covered on an auto policy anywhere, then they're not going to have coverage when they're walking as a pedestrian and someone drives up on the sidewalk and hits them. They're not going to have coverage when they're riding in a friend's car. They're not going to have coverage renting in their own car. So not going to have coverage riding a bike. Uninsured motorists can cover all those situations. So keep your kids, if they're your dependent, keep them on your policy. Ask your insurance company if there's a away from home discount on it, but don't remove kids from your auto policy. And same thing holds true for elderly parents. We see a lot of folks that mom and dad stop driving, but they're still riding in someone else's car. They're still walking in the street. Make sure that any dependent, elder kids, college kids, are scheduled on your auto policy so they have the other coverages that go along with it, not just while driving a car.
Understood. Okay.
Same thing holds true if you have an elder mom or dad finally they decide to sell the family home and they're going to move out of the home into a assisted living facility. Get that parent a rental policy, because remember, you get personal liability coverage along with your home or renter's policy. They're no longer in the home and the home is sold, they no longer have personal liability coverage. If your kid moves out, title the vehicle in their kid's name and make sure the kid buys their own policy, just to get that. You don't want that exposure on you when you no longer have control of it. So let them get their own coverage. If you have any household employees, nanny, housekeeper, gardeners, don't pay cash. Use a service if possible that has workers' comp coverage and that does all the payroll and withholding and all those kind of things, especially if you're going to run for
Mm.
political office at a later point in life. And then if it isn't a service, then make sure you're purchasing workers' comp coverage, and potentially employment practices liability coverage if you're at a little bit higher risk profile for that. Buy cyber liability coverage. Make sure it covers funds transfer fraud, computer fraud. If you're on any boards of directors, like a nonprofit, make sure that they have good D&O coverage. We have a lot of clients who are investors in multiple companies and a lot of startups that don't necessarily have D&O. You can buy a single person D&O policy that will cover you for your exposure only, not covering the entity, but that's important. If you're higher profile, look at like kidnap and ransom coverage. Not a lot of people fit in that category, but some do.
Sure.
Consider flood and earthquake coverage for your home. A lot of people overlook that and think it's too expensive. Well, there's a reason why it's expensive is that people use it. So make sure you've at least considered flood and earthquake coverage. If you are in an area where wildfires, which that's becoming more, read about them in Georgia now, big wildfires, not, traditionally a big wildfire state. Make sure
Oh,
your carrier offers wildfire defense coverage, and then make sure you're enrolled in it, and then annually look at who are the contacts for this. Be it like a home caretaker or gate codes or those types of things, and this is coverage where the insurance companies actually will go in and hire their own private fire service to make sure your home is protected in the event of a mass type event. But no good, obviously, if no one can get to your property or your contact info's out of date.
yeah.
If you have items in storage, which is quite common, if anything is of high value kept in storage, schedule it on your home policy. Like we had a client who was keeping a bunch of rugs in a storage facility while they were doing some work to their house. We scheduled the rugs on the policy, and turned out they got like moths or some sort of weird mold on the rugs while they're
Man.
storage. That's not something that's typically covered, and you have your homeowner's deductible as well. When we scheduled it, it was covered, and there's no deductible. So valuable stuff in storage, schedule it.
Yeah.
If you travel overseas, even one trip a year, buy family medevac coverage, very reasonable cost. And again, you're not concerned about like losing your luggage or a hotel. All those
Yeah.
policies will cover that. But what you're really covering it for is if you get really, really sick and you're in a bad spot or not far from or you're far from home, it's the cost to medevac you back, which can be in the hundreds of thousands of dollars. Um, if you're in a situation where you need to be medevaced, like that's the wrong time to be thinking, man, like we really need our kid out of this country, but it's 100 grand, 200 grand to charter a flight. You don't want to be thinking that decision.
Yeah, no kidding. I never thought about that. Is it only like would you only I guess you would only need because I'm thinking Puerto Rico, right? So we go there. Not necessarily like a bad place to go, but I feel like,
You're
getting
not home,
our
right?
kids right, you're not home, and I mean, so would it work for something like that, or I don't know,
100%.
just
Yeah,
curious. Okay, okay, gotcha. It
100%.
doesn't have to be necessarily that you're going to Europe or Japan. It can be
No, exactly. And their annual policies, they're super easy to get. You don't have to schedule the trip, covers everyone in your household. It's just one of those, you buy
yeah,
it every year, forget about it, and hopefully
yeah.
you don't ever have to get medevac.
No, I've been on enough family trips like with my family back in the day, and it was kind of a running joke. It's like, who's gonna get injured on this vacation? There were six of us, and between there was probably three times when someone got really sick or cut a finger or something that because wild children, but that probably would have been helpful. And if it cost, if it was reasonable, I'm sure my dad, if he'd known about it, would have probably
Yeah.
jumped on it. It would have been good to have.
And again, all these things you're likely never ever have to use, and we
Right,
hope that you never have to use. But just imagine
right,
you're on that family trip and someone breaks their neck, in a swimming pool or surfing or whatever.
totally.
That person's not getting on, a Delta flight and flying coach back home. They're going to have to be medevaced out on it.
Yeah.
It's those types of things that, making sure you have that type of coverage in place. So a couple other things, and then I'm finally done with my suggestions on all the things you
We,
probably never want to think about.
Well, you did say this was comprehensive, so we're good.
Yep. So if you do any short-term rentals of your home, again, this is very common, especially with people with really nice houses. They're like, man, we're going to be in Europe anyway for the summer. We can rent our house out for 40 grand this month. Make sure that your insurance policy would cover any sort of short-term rentals. Usually most will allow a little bit, but if a little bit becomes a lot, then you can negate coverage. Again, the wrong time to find out about it when you have a messy claim come in. Don't do any ride share, or like Turo is a common thing. And people are like, man, we got cars sitting around. Let's make a little money on them. Turo is cool. It's got a cool app. Okay to rent from them. Don't put your own vehicles in the Turo fleet.
Okay.
And then we talked about this several times, but just if you have the ability to put things in an LLC that are higher risk, like rental properties, then we encourage you to do so. So with all this though, the biggest thing is your situation is going to be unique. Use these as a guide, but have conversations, and they have to be ongoing conversations because no one lives stay the same. Things change over time. Your risk profile changes over time. Your risk tolerance just changes over time. The stuff you have changes over time. So just make sure that you're looking at this on an annual basis and updating these things.
Good to know. Man, there's a lot there. I'm gonna have to go back and rewatch this, which I'll be able to do as I'm editing it. Yeah, there's a lot there. In 45 minutes, it's amazing. We covered a lot of ground. So
Yeah. And if you think of things that if you're watching this and you have some suggestions or things we missed or questions, I would love to hear your comments or feedback on it. Again, this is a list that I've compiled over my years of talking with people. And then a lot of this, unfortunately, is seeing claims and reading about claims that have happened to others. So just, we got to plan for things that you never want to have happen so that if it does, you're not having a GoFundMe or something like that to get you back on your feet. So.
absolutely. Well, we'll wrap it up here. I'm gonna head back into the Chubb classroom.
Nice.
Thank you all for listening to Falcon Forward. If you don't subscribe, hit subscribe. We're trying to mix up the content a bit between educational and current news, and we're kind of getting our wings under us. So, anyways, thank you all for being here, and we'll see you again next week.
Thanks, Peter.
Falcon Forward does not provide financial or insurance advice. The following disclosure is available at falconwest.com/privacy-policy. All information provided is for educational and entertainment purposes only. We encourage you to do your own research and consult with qualified professionals regarding your specific needs. If you have specific questions about your property and casualty insurance, our contact information can be found at falconwest.com. This content expresses the views of Falcon West Insurance Brokers, Inc. as of the date indicated, and such views are subject to change without notice. Falcon West has no duty or obligation to update the information contained herein. Further, Falcon West makes no representation, and it should not be assumed that past insurance market conditions, coverage terms, or pricing are an indication of future results. This information is being made available for educational purposes only and should not be used as a substitute for insurance advice tailored to your specific circumstances. The information contained herein does not constitute and should not be construed as an offering of insurance coverage, a guarantee of coverage terms, or a binding quote in any jurisdiction. Certain information contained herein concerning insurance markets, industry trends, and risk performance is based on or derived from information provided by independent, third-party sources. Falcon West Insurance Brokers, Inc. believes that the sources from which such information has been obtained are reliable. However, it cannot guarantee the accuracy of such information and has not independently verified the accuracy or completeness of such information or the assumptions on which information is based. This content, including the information contained herein, may not be copied, reproduced, republished, or posted in whole or in part in any form without the prior written consent of Falcon West Insurance Brokers, Inc. To obtain our property and casualty license information, please visit falconwest.com. Our California license number is 0616640.